Yo guys, I hope you're having an amazing day, and in this video we're going to discuss fair value gaps. We're going to discuss fair value gaps together with inversion fair value gaps, with VIs, with gaps. We're going to discuss how they relate to each other. We're going to discuss when to use fair value gaps, when to not use fair value gaps. So without further ado, let's dive in. First thing you should know is what is a fair value gap. A fair value gap is a 3-candlestick pattern where the high of the first candle does not overlap with the low of the third candle, or when the low of the first candle does not overlap with the high of the third candle. The low of the first candle right here and the low of the third candle, and in between that is your fair value gap. Same time, when there's a bearish move, the low of the first candle and the high of the third candle, there's also a fair value gap. When you have a bullish move up and there's a fair value gap created, that's called a bullish fair value gap, also called a BISI. A BISI is a buy-side imbalance, sell-side inefficiency. This means that on the buy side there's delivered, but on the sell side there's still inefficiency. That means the price would like to trade back into this fair value gap to make it efficient again. Same time, bearish momentum, this bearish fair value gap is called a SIBI. Sell-side imbalance, buy-side inefficiency. That means that price would like to come back here before making another move. Also important to notice when there is no fair value gap. This situation where the high of the first candle and the low of the third candle are overlapping. There's no fair value gap right here. Same time when you have a bearish move, when the high and the low of the candles are not overlapping, you also don't have a fair value gap. Let's look at some examples of fair value gaps, and we're also going to mention which is BISI, which is SIBI. You see here, candle 1, the low does not overlap with the high of the third candle, and this is a down move, so this is a SIBI. Sell side imbalance, buy side efficiency. That means price wants to come back to this level later, and it does right here. On this move up, the high of this candle does not overlap with the low of this third candle, and because this is a move up, it's called a BISI. A BISI or a SIBI, fair value gap in general, will be created due to displacement. If you don't know what displacement is, please check out the video about displacement. Here, you see in the down move, this low does not overlap with the high of that candle, and because the down move is a SIBI, again, high does not overlap with the low first candle, also a SIBI because it's still a down move. And you see price wants to come back there, it does, and in this move up, it leaves the high and the low, a BISI. And then price trades back down, leaving a SIBI. The low of this candle and the high of the third candle do not overlap. So this is a SIBI, and you can do this all day if you want to train. When looking at fair value gaps, there are 3 things I'm looking at. First is the starting value gap. And the starting value gap in a bullish scenario is the low of the value gap. The second part I'm looking at is the CE, the consequent encroachment. 50% of fair value gap. At 3 is where the price completely closes on the fair value gap. When looking at price, you want to look where the candle closes. If the candle closes above the consequent encroachment, you can expect the price will continue upwards. If the price closes below the consequent encroachment, you should expect price to come down again because it's violated the fair value gap, and now you should look at price to go down. When the price completely closes on the fair value gap, you have a really high probability that price will trade down. At the same time, we have a bearish scenario. If price comes back into the fair value gap and it stops below the consequent encroachment, you should expect price to continue downwards. If it closes above the consequent encroachment, you should expect price to go up. And you should be really flexible on this. If it closes a little bit above the consequent encroachment, you should still expect price going lower, but consequent encroachment is a really important part to indicate if price is going to continue downwards or it comes back up. Back to our first example, where we have a SIBI, we want to see what price does when it's inside the fair value gap. In this example, price trades above and close above the SIBI, so you should expect price to not come back down soon. Next candle comes back, touches the consequent encroachment, and continues back up. In this next example, we have 2 SIBIs, and let's watch what price does and see how price closes at the start, the consequent encroachment, or complete close over the SIBI when it comes back to the fair value gap. This candle closes above the consequent encroachment, and when this happens, you shouldn't look for shorts yet. There is a market structure shift right here, so you could expect shorts coming up soon, but now you see that price closed above the consequent encroachment, and you should expect price to come back here first. Next candle closes again in the premium of the fair value gap, and now the next candle is heading towards the highest city. Price does close below the fair value gap, and it did not touch the consequent encroachment yet. This is a sign that price wants to go lower. Let's check the next candle first. Price touches the consequent encroachment and closes below the fair value gap. This is an indication that price wants to come down. Again, closes below the consequent encroachment. Let's see how price respects the fair value gap, the consequent encroachment. Yes, this wick does the damage, but the bodies tell the story. So people would have been taken out right here if they got their stop too tight, but now price wants to come back down. See how the bodies are respecting the consequent encroachment of this city, and you should expect lower prices soon. Next to the fair value gap, you also have the inversion fair value gap. This is where price does not respect the fair value gap, and it will use it later on as support or resistance. In this example, in a BISI, when price does not respect this BISI and it trades right through it down, you should expect when it's going to be used as a inversion fair value gap, you should expect it to act as resistance. Price trades back into the BISI and see big displacement lower, and here this candle closes below the BISI, so now we know it's violated. It's not respected, and now it's traded back into the BISI. And see how the bodies are respecting the BISI and it's used as resistance to trade lower. Together with fair value gaps, volume imbalances and gaps are also frequently mentioned in ICT videos. So what's the difference between a fair value gap, volume imbalance, and a gap? We just analyzed what a fair value gap is. 3 candlestick pattern where the high of the first candle does not overlap with the low of the third candle. There's a fair value gap right here in the form of a BISI. So what's a volume imbalance? A volume imbalance is a gap between the closing and the opening price of 2 candles. High close of this candle and the opening of this candle, there is no volume. This is a VI, volume imbalance. The difference between a volume imbalance and a gap is a gap has complete absence of trading between 2 candles, while a VI had trading or overlap between the high and the low. You see here the wicks are overlapping, but with a gap, there is absolutely no trading in between. There's nothing. And you see this a lot at the new day opening and the new week opening. You see a massive gap, and we're going to talk about it later. In this first example, we see a volume imbalance where the close of the first candle does not overlap with the open of the second candle. This is a VI. The difference between a VI and a gap is quite obvious. With a VI, there is overlapping between the wicks, but not the bodies. But with a gap, there's absolutely no trading in between. Between the low of this candle, the high of this candle, there's nothing. It's just a gap.